Alright, with this video we're continuing our discussion of topic 958, not-for-profit entities, and with this video we'll conclude our discussion on subtopic 20, financially interrelated entities. And up until this point we have understood the scope of this subtopic, so what types of transactions qualify as financially interrelated, or transactions between financially interrelated entities. We've also understood how to recognize them, as well as how to measure them once we get to the period end. We've also understood how to present them. And now we're going to discuss other disclosures that we need to make for certain transactions. And so here we have basically one disclosure section here. And it says that if a not-for-profit entity transfers assets to a recipient entity in an equity transaction, which we saw before in this section here, then it shall disclose the information required by paragraph 605.56 for each period for which a statement of financial position is presented. So this is from the perspective of the not-for-profit entity, the one that is sending assets to the recipient entity. So it says that we need to disclose information consistent with this paragraph right here. So let's go to this particular section and see what all we need to disclose. And we remind you that in the transfer of assets in an equity transaction, basically the not-for-profit entity, which we call the resource provider, has sent assets to the recipient entity, and they have specified itself, that's the resource provider, or an affiliate as the beneficiary. And so in the resource provider's financial statements, then they should disclose the following information for each period for which the statement of financial position is presented. And so this is specifically for equity transactions, not necessarily a donation or anything like that. It's an equity transaction that the resource provider gave to the recipient entity, and it doesn't expect those funds back, although it specifies itself or an affiliate as a beneficiary of the return on those funds. Anyway, we did a couple videos back that describes the characteristics of an equity transaction, and you might go back to that video to understand more details about it. But what we need to disclose when we have an equity transaction like that is these four things. So first we have to identify the recipient entity to which the transfer was made. So in our footnotes, or I guess in a line item on the financial statements, it could be something to the effect of transfer to XYZ organization. But we have to specifically name that entity that we sent the assets to. We also have to say whether there is variance power granted to the recipient entity, and if so, a description of the terms of the variance power. So what does variance power mean? Well, fortunately, we have a definition here, so let's go here and understand what exactly that means. So it is the unilateral power to redirect the use of the transferred assets to another beneficiary. So it says a donor, which in this case would be us, the ones transferring the assets to the recipient entity. If we were to explicitly grant variance power to the recipient entity, then that recipient entity has unilateral power, meaning it by itself, can redirect the use of the assets to another beneficiary. And for that to be the case, it has to be explicitly referred to in the instrument that is transferring the assets. So if we were transferring assets to the recipient entity, and the instrument that is transferring assets, we would explicitly have to say that the recipient entity can send the assets to any beneficiary that it chooses. So in that way, it would have variance power. And unilateral power means the recipient entity can override the donor's instructions, that's our instructions, without approval from us, the specified beneficiary, or any other interested party. So basically, we send them assets, and then their variance power means they can do with them what they choose. So if that turns out to be the case, then we need to describe the terms of that variance power in the footnotes. Another thing we need to disclose is the terms under which amounts will be distributed to the resource provider or its affiliate. So if we sent assets to the recipient entity, then what are the terms of the amounts that will be distributed back to us or the affiliate that we name? So for instance, maybe we sent funds to the recipient entity, and they are to send back to us the returns from investment of investing those funds, potentially. Then we would need to describe those terms that we have. Or maybe it's the case that we sent them assets and we don't expect any back, so the terms would be that there's no assets will be sent back to us. And the final disclosure that we need to make is the aggregate amount that's recognized in the statement of financial position for those transfers, and also how we recorded that amount. So did we record it as an interest in a net asset to the recipient entity, or as another asset? So you remember from prior sections that we're required to record it as an interest in a net asset to the recipient entity. It could be named something different. For instance, it could be a beneficial interest in the assets held by others, or it could be named as a refundable advance. So we would need to specify in the footnotes exactly how much we have sent to the recipient entity, and also the name of the account that contains that amount.